Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. And a pleasant morning to everyone. I would like to first thank the UKIFC, particularly Brother Omar, Isra and Clifford Chance for inviting me to the London Summit this year. I am truly honored and humbled by this opportunity to speak at this event. If you look at the theme of the summit today, which focuses on reimagining Islamic finance, it will certainly provoke deep thought, discussions and debate on what is the future of Islamic finance. But before we start exploring the future of Islamic finance, let's take a moment to go back and reflect what was the original vision of the pioneers of Islamic banking and finance. I mean, I've been in the industry for more than 2 decades. When I first joined the industry, the pioneers like Iqbal Khan and many others taught me that there were 2 core objectives that the pioneers were trying to achieve. The first core objective is that Islamic finance industries should offer an alternative form of financing, which is not based on money lending on interest or usury, but based on risk sharing. And I asked them why. As a student, I asked them, what is the benefit of going to risk sharing? So the answer given was that, of course, from a religious perspective, Islam has prohibited money lending as a sinful activity on interest. Money lending without interest is fine. But the moment you attach any form of gain on money lending, it is strictly prohibited. And they said the same prohibition exists in Judaism and Christianity. So it was part of the Abrahamic faith, and we should not engage in money lending on usury or gain, and we should engage in risk-sharing activities. And the positive side of risk-sharing is it is more equitable because the reward is commensurate with the risk that the customer is taking. So if you take more risk, you get more reward. If you take less risk, you get less reward. And it self-balances in the sense that when the economy is doing well and the firms are making more profit, they share a greater profit with the investors, the customers. If they get less profit, they will share less with the customers who are investors. And if there's no profit, there's nothing to share. As opposed to an interest-based or credit intermediation, you have to pay whether it rains or shines. So if you make money, you still have to pay a fixed amount. If you don't make money, you still have to pay a fixed amount. So this fixed return was against the ethos of Islamic economics, and we felt that Islamic finance was supposed to come up with this alternative form of financing. The second core objective, as I learned when I joined the industry, was the risk-sharing investment must be channeled towards socially responsible activities. And Brother Omar and others have mentioned earlier what we mean by socially responsible. So from a Islamic high objectives perspective, or maqasid al-Sharia, there were 5 areas of focus that this socially responsible investment should be aligned with. One was to protect religion, life, intellect, lineage, and property. These were the 5 core areas that the high objectives were supposed to achieve through what we call socially responsible investments. So when we look at the first core objective in terms of pushing Islamic finance industry towards risk sharing, I must say after more than 2 decades, it has failed miserably. We were not able to achieve this risk sharing for various reasons. I just want to highlight quickly some of the key reasons. One was the pioneers didn't realize that they were actually trying to play football or soccer in a rugby field. There was no soccer field in the world, and we were trying to play football in a huge field which resembled a football field, but it was not a football field. So when we're trying to do risk sharing in a fractional reserve banking model, so every country across the globe which has a financial intermediation has been modeled based on fractional reserve banking system. In a nutshell, it means if I put $100 deposit in a bank in Malaysia or in UK, the bank will keep a certain reserve, could be 3%, could be 10%, and it will then churn out. So in the system, if you deposit $100 and let's say the reserve is 10%, it can churn out 900 pounds of liquidity immediately through the fractional reserve banking cycle. So the fractional reserve banking makes credit intermediation cheaper, better, faster. Why it's cheaper? Because it can create lots of liquidity, and it pays very little to the depositors because deposits are protected by deposit insurance schemes across the world. It's cheaper, and it's better because the capitalist doesn't need to pay more than a small fixed return. So it is better for him. He doesn't want to share his upside, and he can grow his wealth through a fixed return to the banks. And it was quicker because the amount of due diligence you do on credit intermediation is much less than equity intermediation. Because all you need to do is look at his 3-year financials, whether he has sufficient free cash flow, whether he has some collateral. Bingo, you get the financing. As opposed to an equity investment which takes a lot of due diligence. So given the efficiency of the fractional reserve banking system, we found that Islamic banks were not able to compete with their more onerous and more expensive risk-sharing products. So Islamic finance then started to offer hybrids. So instead of offering mudarabas and musharakas, Islamic banks had no choice but to offer murabaha, which is a credit sale, tawarruk, a credit sale with liquidity, ijara, a finance lease, sukuk, a fixed income instrument, tradable instrument, ujra, a fee-based credit card. So these were the hybrids. But over 20 years, Muslims are now waking up and asking if it's so similar to conventional from a risk-reward perspective, from a features perspective, do we really need Islamic finance? What is the true purpose of Islamic finance? So we are now at this stage where we have to reimagine Islamic finance because the old narrative is no longer attractive. So today, many forums are being held across the world to look at the new narrative for Islamic finance. And I wanted to bring you back to the original vision of the pioneers. There were 2 core objectives. One is risk sharing, the other was socially responsible investments. So that Islamic banks have done quite well. As mentioned by Umar earlier, Islamic banks have refrained from socially irresponsible activities, gambling, alcohol, tobacco, pornography, arms, and many other socially harmful activities. So today we are seeing the world moving towards it. It's encouraging to see ESG banks talking about, oh, we should not be financing gambling. We should not be financing arms, for example. So there is a convergence between Islamic finance screening methodology and the ESG screening methodology. But what we need to emphasize is we have developed this screening methodology 30 years ago. So today, Islamic banks have 30 years of experience in terms of looking at the core activities of the companies. How do we screen the companies from these various socially irresponsible activities? How do we ensure the use of proceeds ring-fenced? How do we certify Sharia certification, an independent Sharia committee? All this experience we have to share and empower this ESG convergence to a higher level. Unfortunately, if you look at the UNPRI, which was launched in April 2006 by the then Secretary General Kofi Annan, I think there are 2,300 signatories. How many of them are from the Islamic finance industry? I think it's a handful. The first to join, I think, was SEDCO, Arabesque. We have EPF in Malaysia, Co-op. But where are the rest? Sorry, Gatehouse Bank, of course. So we find that there are not many players from the Islamic world joining this movement towards converting investments into socially responsible. I think there is a belief that the moment you have an Islamic brand, it's already socially responsible. Actually, our criteria of socially responsible activities is still lagging behind. The advancement in that category in the UNPRI, for example, they have gone quite advanced because we are only looking at from the 5 maqasid: religion, life, intellect, lineage, and property. Where is environment, for example? Right? How do we define environment? How do we define social implications and governance? So we are seeing a huge advancement in this screening methodology in the UNPRI and recently UNEP-FI, United Nations Environment Programme for Financial Institutions, have also gone far ahead in terms of integrating ESG screening in financing activities. So 2,300 signatories, only a handful of players from the Islamic world. Then if you look at UNEP-FI, last month, UNEP-FI has launched principles for responsible banking. There were 149 banks, 130 banks from 49 countries. There were only 4 banks with Islamic banking business. And only one bank, Gatehouse, is the only bank which is fully Islamic. CIMB Bank, we have conventional and Islamic. And you have HSBC, which is HSBC Amana and conventional. And you have BNI, a bank from Indonesia, which has got BNI Sharia. So we find that there are not enough participation from the Muslim world, from the Islamic finance industry, in global initiatives like the UNPRI and UNEP-FI. So either we assume that we are already compliant, socially responsible, we don't have to do anything beyond it, but we have to acknowledge that we are still lagging behind. The tools that we use, the framework that we adopt, are far, far less effective than what is being talked about and being adopted in these global initiatives. So if you look at the UNEP-FI's principles for responsible banking, there are 6 core principles which are pretty much in harmony with Islam and Islamic Maqasid al-Sharia. One is aligned with SDGs. There are 17 SDGs, and many of the SDGs are already aligned with the core views and values of Islamic banking. And the other one is very important. They said the banks in adopting the PRB needs to minimize the risk or minimize the negative impact and maximize positive impact. This is nothing other than Amru Ma'ruf wa Nahy al-Munkar. And this is the very basis of the Islamic finance when it started. And we are not there to promote this. Work with the shareholders for shared prosperity. This is what he talked about, Barakah earlier. The 4th is engage with various stakeholders, from your community leaders to your shareholders, to your regulators, to your depositors, to your customers. So there must be a greater engagement, and then find the values that they aspire to and promote those values. And then effective governance structure, and the last one is transparency and accountability. So these are all core values which are in harmony with Islam and Islamic economics. And sadly, neither are we leading this initiative, nor are we supporting them. So we need to reimagine Islamic finance to ensure that the future of Islamic finance is aligned with these global initiatives. And we can enhance these principles. One of the key concerns I have is a bank which has subscribed to PRB will not invest in, say, a gaming company if it employs child labor. But if it complies with fair labor policies, it will still invest or finance in a gaming company. Whereas Islamic finance will not invest in a gaming company, because from an Islamic perspective, gaming has more social harm than benefit. So why does ESG need to look into a child labor issue from before financing? So pure gaming is all right, but if it's gaming plus child labor, then it falls off the screen. So often you look at most of the child labor issues comes, if you look at the developing world, many of the countries, the family structure breaks down because of alcoholism and gambling. They are addictive. And SDG 3 talks about family well-being. So if you adopt SDG 3, then how can you encourage or how can you finance a company that is involved in gaming or in alcohol when you know there is some correlation between these activities and family breakdown that leads to the child being employed? So we look at the end result but not look at the root cause. So these are the things I believe that Islamic finance can contribute by being part of these large global initiatives, rather than sitting at the fringe and happily and being contented that we are already compliant. So when we talk to many Islamic finance and investment institutions, there is a belief which is wrong in my view, that we are already compliant with ESG. But when we probe them, what do you mean by environment or what do you mean by social, they're not able to articulate. So when we have this debate today on the social purpose, I think there's enough information available today. What are the negative impact from a E or S or G perspective, and what are the positive impact that we need to emphasize on? And we need to make sure the Islamic banks and investment companies clearly come in and contribute to ensure that we are aligned and we're able to bring the ESG standards, whether it's PRB or PRI, to a level which is much higher than where it is today. So I wish this summit a good discussion, and hopefully there will be some recommendation that could be adopted by the industry. Thank you very much for this opportunity.